Hello, welcome back to WINFXTRADING Trading YouTube channel, the only channel that has been optimized to make you rich trading the forex synthetic markets. In today's video, I'm gonna show you something very scientific. It's been a long time I uploaded a content, couple of months now, and this is because I don't just create content. I have to look at what traders are passing through, and they're gonna create content to make a kind of a solution come out, and they will be able to actually get a new success and profit driven trading, lifestyle. So the topic is force free, but it can apply to for a synthetic market. So this topic is more of a application of forces, because market is characterized by forces of demand and supply. Okay, this differential between supply and demand actually creates a massive price changes with momentum and energy content. Right here, the times we shall be using our asset as rigid body: resistance force RF, support force SF, trendline force TF, turning point force, swing force highs, lows 𝒕𝒓𝒂𝒅, WF, EMA Force distribution EFDs, range force RAF, supply force South, demand force DEV, resultant force / convention reference, GTransform or GT, that is geometrical transformation, degree of freedom. Okay, so we shall be deploying all this terminology to actually make this topic a reality. Now, before I go into the practical part of this, I will start with the actual concept, a kind of theoretical part of this. Let's assume that this is the price axis P, and this is the time axis T. So right now, we have an arbitrary price movement. So I'm going to write, I'm going to draw a generalized price movement, and this will be during an uptrend market. So we have a market that actually follow this path and then drop a little bit and then create an upward move. Okay, taking out this turning point, drop a little bit and then create an impulsive movement. Okay, this price representation is typical, is not atypical, but is arbitrary, meaning that it does not actually represent any particular price movement, but it's just a kind of example. So right here we have this is a turning point TF. So here we have a TF force. Okay, here we have this place, we have a support force SUD, and here we also have the same place, we have a resistance force RAF. Okay, so a resistance force and support force actually at the same boundary. Yes, it depends on the position of price. Okay, when the price is above that boundary, it becomes a support, the boundary becomes a support. When price is below that boundary, the boundary becomes a resistance. Okay, so we have a trend line force along this path. So this is TF. Okay, so when you represent all the forces that actually model the price movement in any given time frame of observation, that actually give you degree of freedom. Okay, and then geometrical transform or GT is something that actually happen at certain zones, especially near turning point or swing point, because price have to perform this geometrical transformation for trend to actually change. But what is making a lot of traders misunderstand these actions is because of low mathematical skills and scientific skills, because actually the market is more than mathematical and scientifically. And right here, I'm going to go into that geometrical transformation, degree of freedom, and convention reference. Okay, it's very important. Let's start with the geometrical transformation. Right now, we have the price axis P, and then we have the time axis Okay, so right here, if the market actually take this part, I will be using uptrend market. If first the market starts with uptrend movement, we have this. Okay, this is the origin. So we have a price movement or price action like this, and the market drop. Okay, each of these is a function of time and error. Okay, the price is a function of time and error. I've said it. So price is a surface, and that's pretty much cool based on kinetical transformation. And then we have this, and then a small drop, and then we have this. Okay, now this is uptrend. Now the market, if the market try to change trend where it is actually creating an uptrend market, that is called a retracement. Okay, it could be in any type of trend. In a downtrend, it's still a retracement. Okay, so in uptrend, a change in trend after geometrical transformation is a downtrend. Okay, so that's what is happening here. So what is the geometrical transformation? So when price reach this high, it creates a lot of equipotentials, and then the market, instead of making higher highs, it starts making lower highs. That is geometrical transformation. So when market transform from one swing sequence to a differential swing sequence, that is geometrical transformation. So if you want to trade a particular season or trend, make sure you're in alignment with the current state of geometrical transform in that market. Okay, so we can actually transform a market with a positive slope into a market with a negative slope, but these are not manually going to be done. You have to allow the market to actually perform this, and then you have to wait for such thing. It's all about patience. Okay, so when this market is moving along this path, you dare not come and sell. Okay, because once you sell, you are fighting against the actual slope, because it is slope that model the price movement. Okay, so what you do is to buy once you have a minimal error, because if you buy at this session, the error is infinity, and so you will lose. But if you buy at this session, the error is close to zero, then you will profit. Okay, so that is what I mean by geometrical transformation. Also, geometrical transformation is also actually applied in a trending, in major change of trend. For instance, the market that follow an upward path, which is uptrend market, it will reach the maximum price where it will actually range, create a lot of short patterns like M patterns and W patterns and whatever, and then it will break out of such zone and start creating a downtrend. So that event that make the price to range and break out of the range and then change direction is called geometrical transformation. So when the swinging sequence change from higher highs to lower highs, then we talk about geometrical transformation. Now the next thing is geometrical resultant force or convention reference. Resultant force / convention reference. This actually means resultant force / force convention reference. Okay, right here I'm gonna make this for you. So we have a market, like I'm going to be using the vector representation of price movement. So you have, I will start with uptrend markets. So this idea actually is very crucial to actually trade in the direction of the main trend. Okay, so if a market is in uptrend, and we start with uptrend market, and so we have this. So we have this market that is going like this. Okay, so this is a typical uptrend market, right? This is a typical uptrend market. Now, if we want to represent this with a force convention and resultant force and then force convention, first of all, you consider the main direction as the resultant. So the main direction, how do you model the main direction? You use the slope. So it is positive sloping. That's the main direction. If you draw the line of best fit, you see the line that like the line that actually pass through the symmetry of the price movement, of the price action, the price graph. Okay, that line is called, that is resultant force, right? So in order to represent the force convention for uptrend market, you are going to have something like this: an impulsive force of a big length and a pullback. So at a point, this is let's take here as a point where the price is. So you see, these are invisible forces. Okay, so we have a force that will act upwards like this. Okay, the length matters a lot. Okay, so we give it a little bit big length. So this is resultant, I'm sorry, this is the impulse force, which aligns with the main direction. Okay, and then we have a retracement force that acts like the slope of the retracement force is negative, while the slope of the impulse force is positive, because this is during an uptrend market, right? And then in the middle, in between these two, in between the impulse force and the retracement force, we are going to have the resultant force, and the length is going to be the biggest. So the resultant force is RF, while the impulse force is I. Is IF. So what I'm trying to say here, this is IF and this is retracement force RF. There are a lot of forces here, and I didn't mention all of them. Okay, but because of this conversion, I brought in the impulse force and retracement force. Okay, so this is the resultant force. So the resultant force RAF is equals to impulse force IF plus retracement force RF. Okay, so we have resultant force RAF equals to impulse force IF plus RF. Okay, so the magnitude of this force is going to be R, a capital, like the magnitude is going to be like this, RF magnitude, then at angle 𝒕𝒓. Okay, so when market is moving in upward direction, the general model should be like, it's going to be like this: an impulse force of this length, and then a pullback or retracement force of short length. So you see the length of the impulse is bigger than the retracement, and then the resultant will have the highest force. So the resultant will be like this. So when you have this force convention, or before you start actually making analysis, try to, okay, before you enter the market, try to know if this force conversion good. Okay, so this is IF, this is RF, and then this is RF. So this is trying to remind you that even though the market is uptrend, it's trying to remind you that there are still forces that will go against the uptrend, and that force is RF, and it acts at an angle with the impulse force IF. Okay, now your work is to avoid this RF, because at every session in the market, this RF will exist, and the length determines if your stop loss is going to be taken out or not. That's why an uptrend market will be modeled with a channel in which these forces are acting. And so we have these two parallel lines, and so price will go towards the upper one and bounce down, and then go towards the upper one and bounce down. So you see that this is the impulse force and this is the pullback force. Okay, but the overall direction is like this. Okay, so in real application, the force convention can change, but once you understand how it is and what it is, you'll be able to represent it. Okay, what this thing means is, even though this market has buy opportunities, if you mistakenly buy somewhere here and you session your SL or you position your SL inside this channel and within this turning point, you are going to be taken out by this pullback or retracement force. Okay, so the main optimization principle here is to actually minimize the effect of the retracement force and optimize the effect of the impulse force, and that can only be done by error minimization. So when you minimize the entry error to 0, you're definitely going to actually hit your take profit. I will not be going to downtrend, because this video will take a lot of time, so I will not be going to downtrend, but the inverse of the uptrend is downtrend, right? So that's good. So let's go to practical application of this. But we shall be actually deploying some top-down analysis, but I'm going to assume that you already know how to do top-down analysis, but I'll touch it a little bit and go straight to the main topic. Okay, let's assume you want to run the force diagram of volatility 75 index using what I have taught in this video. Let's assume you want to do that. Okay, so we have to consider the degree of freedom. Okay, which is, we have to represent all the forces acting on this market at that region of observation. But before you are going to do this, you must know the market structure to top-down analysis. Okay, so when you step up to the monthly time frame, you will know that the market, when you switch over to line chart to make it more easy to understand, you will notice that the market has more downtrend power than uptrend. But that is cool. That doesn't actually tell you what is happening in the month. You have to run some structural analysis, right? So while running the structural analysis, you are going to actually map out the forces involved until you reach some lower time frame where you will actually pull in, like where you will actually represent the force, where you will deploy the force convention. Okay, so if you keep analyzing this market, what do you see in the present time? You notice the element of buy pressure, but that buy pressure have ended because we have a break of structure here at that turning point. So we have a break of structure here, but that was a fake breakout, so sellers have taken over again, and so this is a resistance and also a support, but it's the force, the support force, resistance force, they are there, okay? But currently the resultant force, resistance force is active and the market is pulling back. So you go to the weekly time frame. As you step down to lower time frame, you can now see other forces involved. You notice we have this trend, we have this trend. This is a trend, yeah, because the market actually reached here and sellers took over. So this is a trend. With 2 points, you get a trend. So we have a trend line force. So this, you have to get a kind of analytical tools, a kind of a book or whatever, or spreadsheet, or something like AutoCAD or whatever you can use to represent forces, okay? And like draw lines and represent forces, okay? Or you can use TradingView. I think with TradingView, you are going to get some of these tools. You have to represent all these forces at different time frame. It's very stressful, but that's what you can do to succeed, okay? You know, it's a kind of culture whereby you stress yourself to get the true direction of the market and you make the real money. So, but if you don't have that culture, you could have other psychological issues or metaphysical issues that make you actually to keep misinterpreting the market because you have not actually applied pressure to know what is happening here. So you need to do that. And you discover we also have this channel. I have this channel, okay? You have this channel, so we have a channel, so we have these are trendline forces, okay? So when you step down to the daily time frame, you can easily draw your force convention or see the force convention, but that is not the first thing, right? I know it's already visible that this market is on a downtrend channel, but we know that this is a turning point. So we have this turning point. These are the things you should have been doing if you really want to succeed in this market for real. Okay. And for me to create this content doesn't mean I have deployed these ideas. But why I created this content is simply because I want to deploy these ideas in future. That's why I created this content, right? But before I start creating this content, I have tested it and know that it's going to make sense. I can't just create something that will not make sense, right? So you see that this market actually created a support force here, but this support force is now a resistance force here. And so you have to record the information and know what it is telling you. So right here, we step down to the 4-hour time frame. And then when we step down to the 4-hour time frame, you pretty much have this, you have this price movement, you have this price movement. So we don't need this. This has already happened. So what you need is to start deploying the force convention immediately. Because when you're analyzing markets, you reach a level where some analysis are no longer reasonable. So why should you be trying this? This thing has already happened, so you don't need to represent what has happened, but you need to understand what is happening right now. So we have this movement, okay? We have this movement, and then we have this movement. So what you need is we have change of trend. That is the geometrical transform. So right here.
But where you did now? I did hotel the witch. I did as the witch you.
You see that is a geometrical transform. Some people
the witch you now. I did the witch you.
are still selling in this market, which is wrong. So you should look for buy because of the geometrical transform. Okay. I think we need to send this to 𝒓𝒂𝒂𝒅 and that's good. I'll be ending this video very soon. what will 𝒓𝒊𝒔𝒑 buy at this session? Like, what is really happening right here? I will not be doing top-down analysis, but I will just step in the 1 and 4 hour time frame. The reason is because that is an average time frame that makes sense for redirection, right? But I'll be using daily and 4 hours time frame. So right here, I'm running my first diagram analysis and degree of freedom analysis. And you see, this is a channel. Okay, so the slope is positive channel, right? So you should be looking for a buy signal at this session. Okay, when you step to the 4 hour time frame, you discover that we also have this session here. This is a resistance and support force, and prices are pushing this session, and then we have these two turning points with these trend line forces, and the market actually break out of that trend line in the 4 hours time frame, but there's no confirmation yet because the candle is still active. We don't know how it will close. So when the candle closes outside these trend lines, we can look for buy on some pullback in 30 minutes or 1 hour time frame, and so we have this. And by the time you map all the degree of freedom forces, you see that you will not be making mistake anymore. You don't even need indicators anymore. And so you see the turning point there. Each of these things are distinct forces, and you have to represent them accurately. And so we have this force here. This force here is a turning point force. So that is probability the market will turn from here. So why should you be selling in this market? It's not reasonable to sell in this market when you have this slope. Well, it's actually not also reasonable to buy in this market because it's still within the control of this energy distribution. Well, this was a sell season. Now you taking a trade when this season, when the forces in this season has not been neutralized, you are going to be having a lot of errors. So I'll be ending this video. I needed to talk things on the downtrend market, but that's true. The downtrend is inverse of the uptrend markets, so you can understand all these things.